Hi, Mr. Derrick Oldensmith from T3 Trading. How are you this morning?
Hey, I'm doing well. It's a pleasure to be back. How you guys doing?
Good, good. Thanks for hopping on with us today. What have you been watching and trading?
So this is a really interesting market environment that we're in right now, and my focus has definitely been a little bit more macro recently. And I've always been a big believer that if you can nail the macro, it makes the micro easier to trade. So even back in the day when I first started trading, I was a pure day trader my first 3 years. I always felt when I had a better understanding of the big picture of the S&P, the NASDAQ, the Russell, that even my day trading would be better. And from a macro perspective, we're just in a really interesting trading environment right now because this uptrend has been phenomenal. AI has obviously been helping it. We've been just continuing to move higher and higher and higher ever since that end of October bottom. On the one hand, you feel like this rate of ascent with this market can't last because otherwise we're going to end up, 50% up on the year in the NASDAQ with the way we're running currently. It's a little bit crazy. Positioning broadly seems like it's getting a little bit frothy. And my team and I just over a week ago were talking about, well, we can't be quite at the top yet because we haven't seen the meme names and the crypto names start to explode yet, because what we've seen on a lot of tops over the course of the last couple of years is they start rallying the junk towards the end. Yeah. And now that's finally starting to wake up over the course of the last week. So there are some yellow warning flashlights in my face right now that are telling me be a little bit cautious. But at the same time, the trend is my friend. There's no reason this has to stop today. And for the time being, until we lose some support levels, we're still in a buy the dip market. So gap downs like we're having this morning have been pretty consistent buying opportunities for 4 months or so now. There's no reason why that needs to end today. It will at a certain point, and you just need to know your key downside technical levels, because if you start to lose them at a certain point, with positioning becoming as frothy as it is right now, it could lead to a much larger sell-off. But you need something to trigger that downside movement initially, and we just don't seem to be at that point yet. It's been an incredible bull run.
What about Apple? I mean, we're seeing Apple fall out of bed here. The 180 is now gone. The 175 is gone. We're 171. This is a big move for Apple, a big 3-day move from go to 180 basically down to 170. Is this what's bringing down the market? Does this bring down the entire market if Apple starts to go down, or can the market rally without Apple?
So it's incredible, right? If you ask me almost any point over the course of the last several years, using yesterday's trading session as an example, there was a point yesterday where Apple was down 3% and the NASDAQ was still flat on the day. So we're in a market right now where there's huge dispersion. So how can Apple be down 3% and the NASDAQ be flat? Well, it's because NVIDIA at the same time was still up 6.5% on the day. So we're in a market that is definitely being marked by dispersion, where we're seeing a lot of these trading sessions where the SPYs and Qs are almost like flatlining, but individual stocks are all over the place. They're up, they're down. I had been looking for Apple, if it broke that 180 support, which it eventually did on the 6th test of it, for a price target into the upper 160s. At this point this morning, we're at 171. It got hit with more bad news out of China this morning. At a certain point, this is probably a dip buying opportunity because it is Apple. There still is a $25 billion per quarter buyback in the stock. There's that consistent underlying buyer that is pretty much always there unless they're in a blackout window. But you would think that Apple breaking down as hard as it is, we'd be lower, and we're still not. So it's the same thing. Watch the technical levels on the Qs and the SPYs. I'm really paying attention to, on the downside, the NVIDIA earnings day low for the S&P and the NASDAQ, which is February 22nd. I think if you lose that low, that's roughly SPY 503, then all of a sudden the market goes into a change. We get a change in environment. But for now, I mean, even with Apple breaking down as hard as it has, you're almost at a spot where you want to look for an oversold bounce in Apple. And then what's going to happen to the NASDAQ when Apple actually bounces back $5, even if it's just an oversold bounce, right? There's a good chance that we get even further continuation in the NASDAQ. So as long as we're holding above that SPY 503, the trend is your friend. You're continuing to go higher, and you're able to have Apple breakdown, Google breakdown, Tesla breakdown, and it's a great trading environment. Maybe not if you're focused on the S&P and the NASDAQ, because they can flatline the way that they have. But this is an environment you can make money to the long side. by, buying SMCI yesterday versus $1,000 off the open. You can make money to the short side by shorting Apple, versus or through that 180, or shorting Tesla for continuation was one of my trade ideas for yesterday. And I don't see any reason why the relative weakness in like a Tesla should be stopping anytime soon. This thing looks awful. It looks like it wants to really continue down. And then more bad news out of their Germany factory this morning. But the market holds in.
Derrick, I know you're talking about a lot of these setups and sharing them in this free trading room. Do you mind talking about the trading room for a second and like what I would get if I do join it?
Sure. So I manage what's called the virtual trading floor for T3 Live. It's the Pro Desk virtual trading floor. It is a community primarily composed of trading professionals, people who are doing this for a living. And it's a phenomenal trading resource. So we get research in there every morning, starting about 7:30 in the morning, all your analyst upgrades and downgrades, earnings reports, macro research. I conduct a team morning meeting every day at 9 a.m. where I review my game plan for the day, what I'm watching as far as the market itself, but also breaking it down to the individual stocks that I'm looking at and why. I give the opportunity for everybody on my team to also present their ideas, which we review as a team. And that would be one thing that I would actually emphasize. It's a team of traders. It's not just me saying, hey, everybody, I just bought Apple, so everybody else buy Apple. It's a community where everyone is giving and taking and sharing information, and we're working together throughout the day. Obviously, 9:30 to 4, we're trading together. 4 p.m. when the market closes, we conduct a daily educational afternoon meeting where we are reviewing the market, drawing out lessons from what the market did that day. And then every afternoon meeting ends with a team Q&A, where it's an opportunity for any trader that I work with to ask any trading related question about literally anything from, hey, Derrick, I bought Google at 11:15 a.m. today at this entry price with this stop loss and this game plan. Can we review it? To broader questions on market psychology, reward maximization, risk management, whatever it is. We have this awesome community here where we all help each other to improve day in, day out.
Beautiful. Well, we've got the QR code up on the screen that people can join through. I'll also throw that link in the chat one more time. Sounds like a great resource, again, to be able to be in that community. It's not just one person. You've got all that information coming in as well as trade ideas. Link is in the chat, guys. Go check that out. Derrick, what about Bitcoin? You've been watching Bitcoin and crypto. I mean, what do you think? We breaking new all-time highs today?
So it's something that I am obviously watching. I haven't really been trading it, to be totally honest. I have traded a few of the crypto names. I traded a bunch of this Marrow over the course of the last couple of months, which was something that I was focusing on, but I no longer have a position in it. When it comes to crypto, I keep an eye on it. And like I said before, I think that the fact that we're really starting to see crypto ramp up and Coinbase ramp up, but also like Beyond Meat ramp up and Root ramp up, that a lot of the times that means that you're getting closer to the end of the cycle and the beginning of the cycle. So for me, I'm not really trading it directly. I'm just watching it for information and as a signal for everything else. I prefer, not to sound like an over crypto bear, but I prefer to focus on what I think are performing assets. When I buy an iPhone, I know that Apple just made money. When I buy a Bitcoin, I mean, what does that even mean?
It's true.
Well, we talked about Apple, Tesla, any other stocks, Derrick, that you've been watching, any other stocks that you think could be kind of a canary in the coal mine this week, things that could give us signals into the market's next move?
So I'm watching all of these short float meme squeezing names, and I'm honestly watching them on both sides of the market. One of the big lessons that I think traders were able to learn, and I was able to learn for myself at the end of 2020 and in the beginning of 2021, when we were in a bubble, it was very clear to me at the time that we were in a bubble. Yet I didn't want to participate in some of those squeezes at that point because I was like, oh, these stocks, they don't make any sense. They don't belong up here, so I don't want to be involved at all. My thought process this time around is, well, when we're seeing the large order option flow come in and gamma squeezes are coming in on a Root or an SMCI or Beyond Meat or whatever it is, I'm not going to be afraid to take momentum trades and be involved in those big squeezes and in those big runs. Even if I don't believe in them in the long run, I'm happy to take them as a 1 to 3 day trade to be able to put some money in my pocket. And then at a certain point, you can potentially look to come in on the other side, but you got to be very, very careful about that. I think that root is a perfect example. You can look at that chart. You could have made the argument to me that this thing was way too extended at 25 after it ran from 10 to 25. Next thing you know,
oh my God,
it's at 43, and this is just the market environment that we're in right now. So I'm really watching like large order option flow with these types of names, because while that's consistently coming in, those gamma squeezes are coming in, and these things can just keep going and going and going for much further than you ever think would be reasonable. But at a certain point, when you see that die down, when you get an opportunity to be able to short these things on the way down, not on the way up, not just averaging up because you think it's irrational that it's at 43. Next thing you know, it's at 73 and you're bankrupt. But if you can short these things on the way down versus levels at a certain point, it can make sense also.
So you're basically saying if you can't beat them, join them. Like, you don't agree with some of these moves necessarily, but you can recognize them, and you're saying might as well play them.
I'm paying attention to anything that's got a high short flow that has the potential for these squeezes. I'm not afraid to be long a Wayfair, a Carvana, a Root, any of those names when we're seeing the volume coming in, when they're confirming and when they're squeezing higher. But I'm also recognizing that, some of these companies at a certain point, similar to the beginning of 2021, when we saw that even bigger bubble than we're starting to see with some of these names now, probably don't actually belong at these prices, whatever that means. And then again, that can eventually create the opportunity in the other way. So it's a great trading environment right now is the bottom line. There's opportunity on both sides of this market. You could be short the Apples and Teslas. You could be, buying the gamma squeezes in an SMCI or a Root or whatever, and then potentially coming in on the other side. It's a great trading environment, but the SPYs and the Qs, you'll sometimes see them just flatline the entire day while everything else is all over the place.
Why do you think this is happening? And I noticed the exact same thing. Why do they have to, and it's probably algorithmic driven, but why do they have to sell something like Apple's going down, they're buying Microsoft or they're buying NVIDIA? Why is that they seem to the algos almost seem to want the S&Ps to flatline? Why is that?
I feel like it has a lot to do with the increase in derivative trading overall that's been involved in the market, in the options trading specifically. It started with the zero DTEs coming online, and that really created a whole change to the way in which I feel markets moved intraday every single day. A lot less opening momentum, a lot more V-bottoms intraday. And I think that a continuation of that is actually what's helping to create this dispersion where, again, mind-blowing to see Apple down 3% yesterday and the NASDAQ flat. Yeah. But it's because NVIDIA is up 6.25%. That's dispersion. And I think that a lot of that is coming from all the option selling that's out there, which is dampening vol. It's keeping the VIX relatively low. It's keeping the S&P intraday volatility really tight, but then allowing all these stocks to be able to move all over the place.
Got it.
Derrick, one of the first stocks when you came on our show, one of the first stocks you liked was Sentinel One. I was just wondering if, how you handled that trade, if you're still in it, and if you are still in it, with the way this Palo Alto Networks has acted and some of these other security stocks. I mean, do you take cues like that, or do you just stick with your stock? This is my setup. I don't care about the other stocks in the sector.
I'm definitely paying attention to the other stocks in the sector. I do believe in fundamentals to some degree. I broadly consider myself as a trader to be like 85, 90% technically focused, but I do think having an understanding of the background of what the company does, of what other companies in the sector are doing is important information. This Sentinel gave a huge move. I did very, very well with it. I got out of it just relatively recently, probably
great call.
4 trading sessions ago or something, and I know that earnings, I believe, is after the close today. So I just decided, you know what, I'm going to get out of this thing. Let me get through the earnings report. And honestly, I'll take a look at what the report looks like. I'm kind of hoping they hit this thing back down, because if they do hit it back down at a certain price point, I'll be looking to get involved. I'm not sure exactly what price point yet. I want to see what the the options are pricing in as far as a movement for the stock. But broadly looking at the chart right here, $22 looks like an interesting support level. Then you got a gap fill of $20. So in any event that they can hit this thing down, similar to what they did to a Palo Alto Networks or to ZS, like they did a couple trading sessions ago, which is also similar company, I'm interested in potentially getting back involved.
All right, one more thing for you, Derrick. I mean, yesterday was a little bit of a puzzling day with, Apple getting rocked and the market, going up, making a new all-time high before crumbling later in the day, and definitely getting some strong follow through. Well, I won't say strong follow through. I really want to temper this, but what would make you get out that scalpel and say, you know what, we're going back down to 4,500. We got not 4,500, I'd say 5,000. We got a nice correction here. Everyone, what's Powell going to say tomorrow, or where we at on interest rates, or bad CPI data? What would just make you say, yeah, baby, time.
So
I'm a whoop up on this market.
I am already nervous about where this market is, to be totally honest. But I respect trends tremendously, because one thing that I've really learned over the course of my career is that a trend can last for much longer than anyone ever expects that it will. Right now, we are very clearly still in this uptrend in the S&P. I want to see us lose some near-term support levels, or even the breakout level that we just had a couple trading sessions ago with the S&P. If we can lose that candle from 2 days ago, then maybe this market's beginning to go into an environment change. And I'm not going to be afraid to pounce on that, because I do think that the way positioning is in this market right now, the more you can go down, the more the selling actually should accelerate to the downside at a certain point. But you need something to actually break the market first in order to create that catalyst that can lead to a feedback cycle of selling in the market. So small dips right now, honestly, like a gap down like this morning, while we're still above major support levels, is something that I'm more interested in buying, but I'm probably not going all in on any new longs pretty much at this point. And then at a certain point, if we start losing some of those support levels, I'm going to say to myself, okay, if the bigger fund positioning, CTA positioning, trend following positioning can really begin to unwind, we can be looking at a much larger downside move. And then some of these more fundamental charts that I'm paying attention to, like the difference between how interest rates have changed, but the market's continuing to move up over the course of these last couple months, all of a sudden those more fundamental factors can come into play as well. So it honestly makes sense to me that the way we've been rallying stops relatively soon. But I can't say that that's today. I can't say that that is a week from now. I can't even necessarily say that that's a month from now. But the market will tell me when that time actually is by losing those levels. I don't need to short the top if we're going to have a real legitimate pull-in. I can see us break the support levels, and then I can press a little further at that point. So that's what I'm looking for.
Great answer. Thank you.
All right, well, we've been on the line again with Derrick Oldensmith from T3 Trade. And if you want to go check out that free trading room, I'm throwing that link in the chat again, or you can hit that QR code on the screen. Derrick, thanks for hopping on with us this morning.
My pleasure. Thanks for having me, guys, and I hope to see you again soon.